You're ready to buy a house, but you don't know how much you can actually afford. No one wants to be house poor. In this video, I'm gonna share a tool with you that will show you how much home you can actually afford. My name is Aaron Tsai. I'm a licensed mortgage and real estate broker in California, and my channel is dedicated to helping people just like you build wealth through real estate education. Now, if you're in Southern California and you're making maybe between $160,000 to $200,000 a year, you're probably asking these questions. Can you really afford an $800,000 home? How much do you need for a down payment? What's your monthly payment gonna look like, including taxes, insurance, and other fees? I'm using these numbers as an example because I've had multiple conversations recently that are very similar to this specific scenario. And to help answer and simplify these questions, I made a really cool spreadsheet called the Purchase Price Planner. Real quick, before I dive into the actual numbers and the purchase price planner, I do want to share how people get qualified for home loans. So lenders are going to use something called DTI, that's called debt to income ratio, to figure out how much house you can afford. It's really just your monthly debts divided by your monthly income, and it helps them determine your max budget. But your real budget should be on something that works for you and your family, not just what the lenders say. Now that I got that off my chest, let's go into the purchase price planner so you can make the best decision for you and your family. Okay, so I made this purchase price planner spreadsheet because I was getting that question. How much can you afford? What's a safe down payment? What will your monthly payment look like? Quick note about this spreadsheet. It's only going to work in Google Sheets. You can get a copy. There will be a link at the bottom if you want your own. And the main thing with this one, you'll see here, only change the numbers or text that are in blue. And you probably don't need to watch this tutorial here because I'm going to walk you through it right now. So start here. Now we're going to go to tab number 2, your numbers. So here we are going to use that example from the video. We're just going to say a 10% down payment, interest rate. You can just leave that at 7%. How long is your mortgage? Probably 30 years. Most people are using a 30-year fixed. Tax rate, this will vary. I like to use 110, which would be 1.1 annually. Insurance rate, you can just leave that as 30 if you don't know. And when I refer to insurance rate, that means home insurance. And then here, because you have less than 20% down, you're going to have mortgage insurance. So here, we're just going to assume you have good credit. It's over 700. If it's below 700, you could put fair credit. And then FHA and VA means you're using a different type of loan. In this example, let's just leave it conventional. And we're going to say good credit. We're going to say no HOA fees. This would be an annual number. And then income tax rate, you could probably put 15%. That's fine. Just leave it as is. Now, in the example I used before, I said if you're a family making maybe 150 to 200,000, so let's do 180,000 annually. Now down here, this is where you're going to have your debts. And when we talk about debts, that means something that has a minimum required payment. So car loans, student loans, credit cards, personal loans. If you have alimony or child support, put in that monthly required amount. Do not put in rent, groceries, utility bills, phone bills, anything like that. For most people, let's say they have a $400 car payment, credit card, they're probably doing $100 a month. No child support. Student loans, this one's coming back. I just had a client recently not get approved for the amount they want because they did not include their student loans and because they were deferred. Now, student loan payments are coming back. I made a video about this. There's a link down below if you want to know about that and how it could affect you in home buying. We're going to put 300 here. Obviously, the numbers I had in here were for a previous client scenario. They helped pay their parents' mortgage. In this situation, we're going to put 0. Down here, this would be if you have 2 people on the loan. So make sure you put their annual income here and then their monthly debts in here. Keep in mind, this is your gross income. That means before taxes. Now, once you've filled out all of this information, then you get to go to tab number 3, Purchase Price Planner. And so this is showing a recommended max purchase price of $555,000 with a total monthly payment of $4,200. That total payment includes your principal and interest, your property tax, your homeowner's insurance, and your mortgage insurance. Keep in mind, the numbers in this spreadsheet are just for educational purposes. Just an example. If you want your specific scenario, reach out to a licensed loan officer, or you can actually email me directly to Darren@realdarrensci.com. But let's go through the rest of the example. Now here you got a 10% down payment and you have an estimated $14,000 in closing costs. Now, obviously this is just the recommended maximum, but you're going to be approved for higher. And this table right here shows you different risk zones. So I have safe, comfortable, I have confident, I have stretch, and then I have risky. And these numbers down here are based off of that debt to income ratio that I was talking about before. And then in here, it will show the purchase price, the recommended purchase price. It will show the down payment. And then this here shows the percentage of your net income, because we both know what you take home is not the same as your gross income. And so in this example of someone making $180,000 with those number of debts, they would actually qualify upwards of $900,000. But is that recommended? Depends on the scenario. You know, if you have a financial advisor, make sure you consult with them. But yeah, I would actually take a look here at this confident number. So I would say, you know, very comfortably at $700,000 purchase price, 10% down, you could still comfortably afford this monthly payment while still funding retirement and having a good lifestyle. And so keep in mind, you're going to be approved for an amount that might actually be more comfortable for you. So make sure you do your research and make the best financial decision for you and your family. Now, moving along this spreadsheet here, you can actually look at different zones. So let's say confident, this will show you the down payment at 10%. This will show you the closing costs. I put it at 3%, but you can actually change this. Maybe it's 2 or 2.5%. So this will show you an estimated cash to close. And then if we go further down here, you can put in the square footage of the home. Let's say it's 1,500, depending on the age of the home or the location of the home. You know, maybe your utilities, just leave it as moderate. If it's an older home, you know, I would put this as high maintenance. And if it's a brand new home, I will put low. And then this shows you your estimated total monthly cost, including utilities. Now, this next tab here is called affordability. These are just based off of 2 financial rules that many financial advisors will tell people. How common they are in my market is probably not that common, but if you can achieve this, you're setting yourself up for success. Now, the 2836 rule, this is a classic lender approved guideline that's going to help you feel house poor. Right? This is just saying you're going to spend no more than 28% of your gross monthly income on your total housing costs, right? That'd be your mortgage, property tax, insurance, HOA, and then keep all of your monthly debts under 36% of your income. So in this scenario, we would be looking at a $555K purchase price for a total monthly payment of $4,200. And the other rule that I'm sharing here is very conservative. It's called the 30-33. This means that your mortgage is less than 30% of your gross income, and you have 30% of the home price saved before buying. So you'd have 20% down payment, and then you have another 10% for closing costs and emergencies. And then the last piece of it is that the max purchase price is 3 times your annual gross income. I don't see a ton of people achieve this one in my market. I know it's possible in a lot of other markets though. And last but not least here, you have this offer guide tab. And so you can just go here and you can put in a price that you like, maybe 800,000, and it'll show you your estimated cash to close, and then it'll show you your mortgage payment. And so where is this number coming from? It's coming from what you picked in here. So if you picked stretch, then you go back to the offer guide, it's going to compare these two. So in this scenario, we would be looking at that stretch price of 832. Then you're going to be able to see what the numbers look like for if you go 5% lower, 10% lower, 5% higher, 10% higher. And this is really for someone that is considering putting in an offer and they want to see the differences in offers. And so this breaks down everything. You have an estimated down payment, you have the estimated closing costs. It shows your mortgage payment compared to the stretch price here. And then it shows your closing costs compared to your stretch price as well. So last but not least, you have a data tab. Please don't touch anything in here. If you change this stuff, it will destroy the entire spreadsheet. So I know that spreadsheet might have had a lot of information, but if you do want a free copy of it, there's a link below and I'll email it to you. Also, if you're ready to take the next steps or you just want someone to chat about your specific scenario, you can email me here, Darren@realdarrensci.com. Once again, the numbers in this video are all educational. They're not like a quote or anything. So take those with a grain of salt. They're just estimates. And as always, thank you for watching my videos, and I truly hope they help you.